Good morning, everybody. Welcome to Morning Markets, Thursday, the 9th of April. A couple of things that I wanted to share from our meeting today. The first of which was just the overnight performance in markets. In equity markets, we saw the US continue to move higher, with the S&P 500 closing up another 3%, taking the move higher in the week of close to 10%. Looking at other markets, what did we see? UK and Europe also continued to move higher yesterday. Both of those markets up between 4.5%, 5.5% for the week. If we cross through to Asia overnight, relatively mixed performance there, but as with other global markets, most of those markets have moved up over the course of the week. Bond markets, we've seen, I suppose, relative stability and normal trading behaviour within the sovereign bond market. And then within the corporate bond market, we've continued to see spreads come in over the course of the week. The other thing to touch on that we mentioned yesterday was just the expectation from the Federal Reserve FOMC minutes when they made their emergency rate cut to 0 to 0.25%. A couple of things that I took out of the minutes reading through them, highlighting really the liquidity challenges that were evident in the market for us to see. The other thing, that rate reduction wasn't the only method of alleviating stress in the markets. They touched on the need for unconventional policies, but also they talked about the need for the speed of implementation of those unconventional policies. And as we saw, a lot of those policies were enacted very quickly after this meeting. The other two things that I think are key from the minutes, the deflationary environment that we find ourselves in now with the economic demand shock, falling oil price, etc., all leading to deflation in the near term, which will challenge the Fed in reaching their 2% inflation target. The other thing that they did note, and I think this is important, is that the strength of the US financial system and the US banks. They didn't mention this, but I think it's important that we think about that in the context of 2008, 2009, when at that point this was very much about a financial crisis and the impact of the banking system. That's not where we are at this point today. So that's a real positive and something that's different from 2008, 2009. I touched on just the European bond market earlier. Why was that happening? Well, again, much as I sort of alluded to yesterday, we didn't get any resolution from the finance ministers meeting, and indeed they've walked away from those discussions after some 16 hours. It's reported that they tried to reach agreement but couldn't. I think that just speaks to, if we contrast that with the coordinated responses that we've seen from other countries, and potentially does challenge the Eurozone when we think about the pace of improvement and recovery as we try and work our way through COVID-19. Finally, just a few snippets in the US in the presidential election race. Joe Biden now looks to be, all else equal, to be the candidate that will challenge Donald Trump, with Bernie Sanders taking himself out of the Democratic race yesterday. And then just finally, we've seen Wuhan in China open up after its 76 days of lockdown. I think this is important and something that all of us need to think about, and governments need to address, is how we move forward with removing the restrictions that are currently in place in countries. So thinking about what is the exit strategy from the current lockdown, it is important to give a roadmap as to how we can think about economic activity returning. Thank you. We'll speak again next week.